You're watching the Business Today show. I'm Chethi Narula. Let's begin with the top stories of the day. Shares of Fortis Healthcare tanked 15% in the day's trading session. This after the Supreme Court orders forensic audit into the sale of Fortis Healthcare to IHH. The Apex Court also sentences the Singh Brothers to a 6-month jail term. And the stock markets tumble as Fed continues to be hawkish. The Lal Street shows resilience even as Fed hints at more rate hikes. Sensex and Nifty slip 0.5%. As the dollar index surges to a 2-decade high, rupee tumbles to a record low, slips nearly 100 paise to a record low of 80.95 against the US dollar. It's the biggest fall for the Indian currency in 7 months. Social media is flooded with instances of IT companies not honoring their job letters. Job claimants speak to Business Today television, give the flip side of the raging moonlight debate. A day after Rishad Premji, executive chairman of Wipro, announced that the company had slashed 300 jobs because of moonlighting, here's another perspective to the debate when it comes to the job prospects for the freshers in the highly competitive IT world. Here is Akanksha Chaturvedi with a special report.
It's the worst nightmare of any fresher out of college. Having secured a job after 4 years, having been issued an offer letter by an IT giant, and then having those high hopes dashed as the company has not actually taken them on board. In the past few days, social media has been flooded with appeals and requests of those who were issued offer letters by IT companies but who have not been onboarded. IT jargon for being actually given a job. Industry insiders suggest that many IT companies issue offer letters to freshers in anticipation of a contract and onboard them only when it is a time to execute the deal. 2 such job claimants spoke to Business Today, and this is what the first one had to say.
So when did you get your offer letter?
I got my offer letter in Jan.
Okay. This year?
Yes, ma'am. This.
All right. So how did you get your offer letter? Was it through a campus placement or was it off campus?
It was off campus. We got placed in Wipro Elite, the 3.5 LPA package. It is called as Elite, ma'am. Only those people who performed better were selected for a program called Velocity.
Okay. Were you able to clear those exams?
Yes, ma'am. Most of us cleared those exams with more than 80%.
Okay, but you have not been onboarded yet.
Yes, ma'am. There were 3 types of people. First set of people who already received their offer letter for the turbo, and they got onboarded in last few days, ma'am. 19, 20, and 21.
Okay.
And other set of people is who got offer letter and onboarding for 28, but they got postponed.
All right. So
and another set of people is some got offer letter in August 10th, but they didn't receive any joining.
That's not all. Another job claimant had his own story to narrate.
I received my offer letter in November previous year.
Okay, November 2021.
Even and I started my internship in a March.
Okay. Was it a paid internship?
No, this is an unpaid internship.
With Wipro?
Yes. And it is completed in August. And then we do not receive any update regarding onboarding.
Are you being paid salary? क्या आपको तब से अब तक में कुछ सैलरी दिया है ऑफर लेटर के टाइम से?
नहीं, मैं कुछ नहीं दिया अभी. सब अनपेड था. अभी जो भी वो चली थी इंटर्नशिप थी वो सब अनपेड चली थी, बिना रुपए की चली थी. कोई भी उसमें पैसा नहीं था.
So have they given you any tentative dates कि इस डेट में आप ज्वाइन करेंगे?
पहले वो तो दी थी कि जो आपकी ऑनबोर्डिंग होगी वो अगस्त तक हो जाएगी.
But it's September, it's almost October now. Yes.
फिर उसके बाद कुछ आया नहीं इनके बारे में कि कब होगी ऑनबोर्डिंग. कुछ मतलब आ ही नहीं रहा, कुछ भी डेट नहीं आ रहा मतलब.
Business Today TV reached out to Wipro on the allegations and was told by a company spokesperson, Wipro can confirm that it will honor all offer letters that have been made to deserving candidates. Interestingly, these disclosures come at a time when IT majors have been accusing employees of moonlighting, working freelance in their free time. The debate exploded at the Business Today India at 100 event when top bosses from TCS and Tech Mahindra slammed the practice.
25 years from now.
But it is Wipro which has gone public and said it has axed 300 employees found to be working on the side for its competitors.
Months were doing exactly that. To me, it's a complete violation. The reality is that there are people today working for Wipro and working directly for one of our competitors. Right? We've actually discovered 300 people in the last few months who are doing exactly that. To me, it's a complete violation of integrity in its deepest form. So that was what I was referring to. There's no space for someone to work for Wipro and competitor X, Y, and Z, and I think they would feel exactly the same way if they were to discover the same situation. So that's what I meant, and so I do stand by what I said, that I do think it's a violation of integrity if you're moonlighting in that shape and form.
Wipro's delay in onboarding employees has put techies in a state of deep distress. IT professionals fear that the company might start rolling back offers, although the company maintains that it would honor all the offers made to deserving candidates. The question still remains, why is Wipro judging whether a candidate is deserving or not months after giving them the offer? This was Akanksha Chaturvedi for Business Today TV.
The Supreme Court today sentenced the Singh brothers, Malvinder and Shivinder, to a 6-month jail term in a contempt case. The court also ordered a forensic audit into the sale of Fortis Healthcare to Malaysia-based IHH Healthcare, leading to its share plunging over 20% in the trading session. Business Today TV gets you the whole story. Here's a look.
14 years after selling Ranbaxy to Japan's Daiichi Sankyo for whopping $4.6 billion, the two grandsons of the pharma major's iconic founder Bhai Mohan Singh have been sentenced to 6 months in prison by the Supreme Court. The Apex Court today ordered the jail term for Malvinder Singh and Shivinder Singh in the Daiichi Fortis case, as well as fine of 5,000 rupees. The brothers are already in Delhi's Tihar jail since October 2019 in connection with the case of alleged illegal diversion of funds and money laundering. The brothers also figure in a sensational case investigated by Delhi police against conman Sukesh Chandrasekhar for allegedly cheating the family of over 2,000 crore rupees. The Singh brothers were dragged to Supreme Court after the Japanese drug maker challenged the Fortis IHH deal to recover the 3,600 crore rupees arbitration award it had won at a Singapore tribunal against them. The brothers had sold their pharma company Ranbaxy to Daiichi Sankyo in 2008 for 9,576 crore rupees. However, soon after, Daiichi discovered they had hidden information about the company being under US FDA scrutiny. The next few years saw the Japanese major apologize to a court in US, pay $500 million in fines, be penalized by the EU on various counts, and fight numerous legal battles. Ranbaxy was finally sold to Sun Pharma in 2014 for around $4 billion. Meanwhile, the two Singh brothers were living life king-size from the proceeds of Ranbaxy. According to information available with Business Today, 2,000 crore rupees was spent on taxes and repaying loans. 1,750 crore rupees went into Religare and 2,230 crore into Fortis Healthcare. 2,700 crore rupees was reportedly given to their maternal uncle, Gurjinder Singh Dhillon, who was also the head of Radha Swami Satsang Beas. The Supreme Court order today on Fortis involves its subsequent sale to Malaysia-based IHH Healthcare in 2018. IHH bought 31% stake in Fortis for $1.1 billion and announced an open offer for an additional 26% stake. The open offer was, however, opposed by Daiichi, which had won a 3,600 crore rupees arbitration order against Fortis, followed by a contempt plea against the Singh brothers in 2019. The Supreme Court also remanded the issue of Fortis IHH deal to the Delhi High Court, which will decide on whether the open offer for Fortis can be allowed based on the evidence it gets. Fortis, meanwhile, has said that proceedings before the Supreme Court have concluded with certain directions and the suo motu contempt has been disposed of and that it was seeking legal advice to decide its future course of action. Bureau Report, Business Today Television.
Now let's take a look at what else is making news in the corporate world. Budget carrier SpiceJet has offered a 20% salary hike to all its pilots with effect from October. SpiceJet's decision to hike the salaries comes just a few days after the airline decided to send 80 pilots on leave without pay for 3 months to cut costs. The plot thickens in the ABG shipyard fraud case. The Enforcement Directorate has attached the shipyard's agri-lands bank deposits worth over 2,747 crore rupees in a money laundering case. Ola's S1 scooters are also to foray into the global market. The company plans to enter Nepal by the year end. After the Nepalese market, the unicorn startup is going to be taking the e-scooters to ASEAN and European Union soon. India and the United Kingdom look to seal the free trade agreement by Diwali. The two countries aim to double bilateral trade to about $100 billion by 2030. My colleague Karishma Asudani spoke to the chair of UKIBC, Richard Heald. Listen in to an excerpt of that conversation.
How do you see the timeline? Are you confident that it's going to pull off by next month? That is the agreement. And what is the current state of negotiations at?
Well, I think everything I'm hearing really does indicate that there is a seriousness to try and ink something at the end of October. We've had a new Prime Minister in the UK. I don't think that's going to change anything. In fact, in many ways, I think that Prime Minister Truss is actually really committed to make this happen. So I'm pretty confident.
Right. You did mention about the new Prime Minister, but also what's with the new developments is the global situation, a geopolitical situation like the inflation, recession that's quite ringing bell across the world. Is that going to be a concern, you see?
I don't think it's going to be a concern because, in fact, in many ways, the benefits that come out of a free trade agreement will spur and assist the development and tackling these problems that you indicate. Some of them are very specific. Some of them are very much driven by what is unfortunately happening in Eastern Europe. Some are more macro economic. But generally speaking, anything that facilitates trade, encourages economic dialogue between two nations which have a strong foundation already has to be good.
Right. Now, what are the key areas and sectors, that are going to be under focus on this economical partnership between India and the UK? We are talking about a lot of employment opportunities for many.
Well, I think there are three levels that I look at. And the first level is those sectors that Prime Minister Modi and Prime Minister Johnson highlighted in the strategic partnership announcement that they made in 2021 and the 2030 roadmap, which they outlined at the same time. So things like sustainability, sustainable energy, things like mobility, issues that really do impact on society and societal development. So education, technology, healthcare, as well as nuts and bolts things like aerospace and defence. These were key areas that the Prime Ministers focused on jointly, and those certainly are major themes. Below that, we have a whole raft of touch points between UK and India across different segments like financial services, professional services, etc. And then right at the bottom, if you like, but very, very important because it underscores everything, is ease of doing business. So tariff things, access, and ease of doing business. Those are the three pillars in which the free trade agreement and the discussions are going to be built.
Slipping into a very short commercial break. There's lots more coming up on the other side. Stay with us.
Ever heard of zombifiers? No, I'm not talking about flesh-eating maniacs. This is a rare phenomenon that is also known as overwintering fires. This occurs mostly in countries like Russia, Canada, and Alaska. So what are zombifiers really? Peat fires burn underground and are very difficult to detect. They're also known as zombie fires as they can burn underground and reignite weeks or months later. Climate change is drying peatlands and making them more susceptible to fire. During a fire, burnt trees fall to the ground, igniting the flammable peat in the soil. The embers can continue to burn more than a meter underground for weeks or months, even in winter in certain regions of the world. The embers are fed by peat, a spongy material rich in carbon formed by decomposition of organic matter. They burn underground and return to the surface where in dry and windy conditions they can start a new fire.
Everyone's busy finding what's trending. You're busy finding out why. India Today, for those who research before reacting. Download the India Today app now.
Welcome back. The Indian equity markets have, as expected, reacted negatively to the massive 75 basis point hike in interest rates by the US Federal Reserve. The Sensex closed the day down 337 points at 59,119, while the Nifty was down about 89 points in today's trading session. In fact, it was the forex market that took a beating as the dollar index surged to a two-decade high. The rupee hit a fresh record low, tanking 99 paise to close at an all-time low of 80.95 against the US dollar. The US Fed has meanwhile indicated its battle with inflation is nowhere over and more big hikes are in the offing by the end of this year. The focus now shifts to what the RBI may do on 30th of September.
Our expectation has been that we would begin to see inflation come down, largely because of supply side healing. By now, we would have thought that we would have seen some of that.
But that has not happened. Inflation is still galloping on the US, having hit an incredible 40-year high in the past few months. Housing prices, a crucial indicator of prices in the world's largest economy, are still red hot, and the 4 interest rate hikes since March, taking the rates from 0.25% to 2.50%, have done little to cool prices. Faced with unprecedented situation, the Fed decided to hike rates by 75 basis points to 3.25%, taking them to a 14-year high.
Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. The FOMC is strongly resolved to bring inflation down to 2%, and we will keep at it until the job is done.
It's not only the American economy which has been buffeted by the strong winds of inflation. The global supply chain shock kicked up by the Russian invasion of Ukraine in February still has not subsided, especially for the Western economies. While the price rise index is at 8.3% in the US, UK is faring much worse with a 9.9% inflation. Brazil is at 8.7%, Germany at 7.9%, and Italy at 8.4%. The two Asian economies of China and Japan are in a relatively more comfortable position. India's latest inflation figure clocked in at 7%. There are, however, deep fears that the tightening of the money supply could lead to recession across the globe. Growth estimates are already pointing south, and the US Fed seems aware that it is walking a tightrope.
With today's action, we have raised interest rates by 3 percentage points this year. At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation.
Indian markets, meanwhile, dropped after the overnight Fed rate announcement, erasing most of the giants made this week. All eyes are now on Reserve Bank of India and what it may do next Friday.
The fiscal perspective, tax collection perspective, the capex perspective that the government is expected to relatively better off. So if I have to pick and choose, whether FIs have to pick and choose in that aspect within the emerging space and have their fair share of equity allocations, India still remains to be a sweet spot. So yeah, I think there might be volatility concern, but longer term flows will continue.
The RBI has already raised interest rates by 140 basis points in the past 5 months, hoping to tame inflation, which is above its comfort range of 2 to 6%. The central bank, however, has to balance this action with the fears of a big dip in growth rate. Bureau Report, Business Today Television.
My colleague Sakshi Batra spoke to Suresh Soni, CEO Baroda BNP Paribas MF, about the implications of the rate hike. Take a listen in.
A hike in line with the market expectations, but a hawkish commentary pointing to further hikes ahead. How are you reading into the way the Fed is moving as far as the interest rates are concerned? And where do you see the Fed rates at the end of the hike cycle?
Sure, Sakshi. So a couple of things out here. The market was divided between 75 or 100 basis point hike by Fed, but Fed delivered 75 basis point hike. And it's the third hike in a row from Fed. So they've been on a very rapid hiking path thus so far in this year. And the guidance from Fed also remains reasonably hawkish. What has changed from the Fed policy is that earlier the market was expecting that Fed at some point of time in 2023 will pause and reverse. Now the reversal or the reduction of the rate has been pushed further to 2024. And it does appear that Fed will be on a protected hike path. Coming to its impact on the market, interest rate rise usually impacts the market in 3 ways. One, when the risk-free rate goes up, you demand, of course, higher rates from the other risky assets like equities and everything else, because you discount the future cash flow of equities, and therefore it has a negative impact on the equities. Second, it also impacts the consumer demand, because as you start paying higher rate of interest, it does slow down the consumer demand, and which essentially is the objective of policy rate hikes in the first place. And third, of course, it impacts the corporate profitability in the home market. Now, from India's perspective, when you see the rate hikes being done by global central banks, and it's not Fed alone, but you see EC, and actually you see 90 central banks currently on a rate hike path. The huge rise of interest rate that everybody is pushing towards. It also, ipso facto, pushes India also in a rate hike path to a certain degree. It limits our degree of freedom on the monetary policy. RBI has been raising rates so far. We do expect RBI to raise rates further in the forthcoming policy. And that could probably continue for some time. Now, what does it mean for the equity market? What does it mean for our market in near term? Rate hikes are reasonably, generally perceived to be slightly negative, and there was a slight negative reaction that you saw in the equity market. You also see negative reaction in the rupee, because you have generally seen US dollar to be the strongest currency this year against almost all major currencies. And when the rate goes up in US, dollar strengthens even further. But so near term, it is slightly negative for India. But from a medium term perspective, let's remember that interest rate is just one of the factors in determining the direction of the market.
Right.
2003 to 2007, for your reference, the interest rates went up in India from, let's say, about 200 to 300 basis points, yet market climbed almost 7 times.
Right. Understood that. But I wanted to ask you here that is a US recession given the way Fed is hiking rates? And if yes, then what could be the impact for countries like India?
I don't think it's given. See, the Fed's pace of hike or the path that they are showing of hike indicates that US economy has not yet slowed down. People have been talking about recession for the last couple of quarters, but that does not seem to be happening as of now. Right. So I don't think you can bake in that as an absolute certainty. US Fed is right now trying to engineer a bit of a slowdown because there seems to be an overheating of the economy in US. You have seen, record unemployment rate, and you also see record inflation. Both point to a bit of overheating of the economy, and they're trying to slow it down a bit. Whether they can do a calibrated slowdown or whether it heads into recession is yet to be seen.
Right. But in terms of markets, since you said that perhaps in the short term it could be a negative, but in the long run, Indian markets could continue to perform well. But, we've seen the Nifty being an outperforming index so far this year. Will Nifty remain the world's smartest index despite these kind of rate hikes and dire projections by the US Fed?
So Indian markets have held on quite well so far. And there's a lot going for India right now. So there are three factors that I'll outline.
Yeah.
One, the resilience of Indian economy. We never did the helicopter money like the West did, and therefore there is no monetary stimulus withdrawal, and therefore India's economy continues to be on a steady path. Second, we've also not had runaway inflation like what you have in the West. Yes, our inflation is above the normal tolerable zone, but let's say in India, our tolerance zone is 4 ± 2, and we are at about 7%. In West, US, let's say your inflation expectations are 2%, and right now the inflation is running at 8%. So the inflation situation globally, whether it is Europe or US, is a lot worse. India is in a relatively better spot. So India's macros are in a decent shape. We have also been getting steady inflow of equity in Indian equities from domestic investors, both retail as well as pension funds like EPFO on a regular basis. That has also given some strength to the market. And thirdly, of course, we are seeing pricing power coming back to the corporates and return of corporate profitability coming in. So strong macroeconomy, the equity flows into India, as well as return of corporate profitability. All of that have been supportive of Indian equity market. Now, going forward, would India continue to be outperformer? Short term, very difficult to call. It is naive to say that everybody else gets impacted in the world and we would not get impacted. I think some of the volatility cannot be pulled out. But India being largely a domestic economy and have not had the kind of inflation issues or monetary withdrawal that the West is going to experience, we should be a relative outperformer in the medium term.
Right. Also, sir, you pointed out on the dollar index as well, how the US dollar index surged, breaking above the key level of 110 after the Fed meeting outcome. Now, that also resulted in the record low levels for the rupee today. Is that a worrying sign for us? Also, looking at how the other Asian currencies are sinking constantly.
So, in general, I think dollar has been extremely strong this year.
Yeah.
And it has gained much more against all other currencies. Rupee has held relatively steady. As regards rupee is concerned, we are having relatively high current account deficit here because of the oil. But at the same time, in India this year, what we have seen is large FI withdrawals in the early part of the year, which is now turned into, large outflows have turned into inflows. So at the margin now, the balance of payment is looking slightly better balanced than it was before. Reserve Bank of India has got record reserves with it. I don't think we are in a fragile five kind of a situation we were in 2015, but this is something that we should be monitoring on a regular basis.
Right. But what do you see as the level of the rupee going forward from here? Do you see a sharp depreciation from here on, or will the RBI stem to arrest the fall?
So RBI has been active in the market. We are not active traders in the Indian rupee, so I don't have an absolute mind, but I do believe RBI is doing its best to avoid volatility in the rupee. And balance of payment going forward looks better than what it was in the last 6 months. Two reasons: cooling or stabilization in oil prices. And secondly, also foreign investors at the margin being a net seller having turned a net buyer. So that kind of improves the balance of payment situation for India and therefore allows RBI to conduct relatively more, its local monetary policy as well as stabilizing the rupee operations.
That's it from me, Chaiti Narula, on this special show of Business Today Television. Keep watching India Today. Thanks for tuning in. Thanks for your time.